So hello guys, welcome back to the channel. So today we'll be talking about the golden crossover. This is probably the most important thing and the most simplest thing which every person who is into stock markets must know. And trust me, this video is going to change your life in a very big way. This video will teach you a lot more things than what any other video on the whole internet can teach you. We'll be learning about candlesticks, support and resistance, crossovers, moving averages, and all these things which are taught in a series of hundreds of videos. I'll be teaching you in one video, and this is going to be a long video, and please watch it completely. And if you like it, give it a thumbs up, and if you don't like it, you always have a thumbs down button. But yeah, please comment down below what you feel about whatever I tell you. First, let us understand what a golden crossover is. Golden crossover is basically, there are two lines. Okay, what those lines are, how those lines work, and from where those two lines come from. So what we'll do is we'll look at the Nifty chart of the past 5 years, or from 2015 to 2020, and see how many times this crossover has occurred and how much returns it has given. We'll be looking at a 4-hour time frame because I think that is what will give us a better result. You can even look at on a day. So we'll be looking at a 4-hour time frame for this. So let's see how the Nifty has performed for every crossover since 2015 to 2020. So here we have Nifty 50 index. So let us zoom out a little bit, and probably will go with the 1 day itself. As you can see here, it is 2015. So this is where we will start. The most important thing is there are two lines, and the smaller moving average should cut the larger moving average upwards with strength. So let's see. So here we have one buy signal. So what we'll do is we'll try to measure of how much it is. So as you can see, this is 7% in 209 days. And then again, we got one here. If we start here and go up till here, so probably it is 26% in 623 days. And we don't get it for a very long time. And then here we have one more. And this is also around 5.6% in 147 days. And then here we had the last one, and this was about 6.7% in 123 days. And then we had a big fall, and then we had a crossover here, and right now we are sitting at about, if we check it till here, we are 27% in 155 days, which is very good return. So this is how it was, and I had calculated that if you had started using only buy signals of golden crossover in from 2015 to 2020, you would have doubled your money. So if you had basically put 1,000 rupees in a Nifty tracking ETF, then you would have made 2,000 rupees. If you look at this chart, what you see is they are all, this chart doesn't look like a normal chart which you see on TV like this. This chart looks a bit different. This chart is known as a candlestick chart. So each of these is known as a candlestick. So as I told you that we are looking at a day time frame, each stick represents 1 day. Now how does each stick represent 1 day? So now let us try to understand this in a very simple way. So right now it is 5 a.m. and none of the markets are open. I think only Australia will be open right now. So let us look at a currency pair, because Forex trades 24 hours a day. I think 23 hours a day, somewhere like that. So if you look at this chart, so I've actually taken it on a 1 minute time frame. So each candle will be 1 minute. So what generally people tell you is, if it is a green candle, then open is here and close is here, and these are called as wicks of candle. So wicks show the highest and the lowest prices, and the body shows the open and close. It is same but inverted for the red candles or the bearish candles. Open is up and close is down, and low and high remain at the same places. So if you look at this currency pair of USD and JPY, so as you can see here, this is a 1 minute candle chart. So each candle represents 1 minute. So as you can see, we have 43 seconds left and a candle is being formed here. So if the price will go down, this will come down more, and if the price will go up, it will leave a wick there and it will come up. I'm actually waiting for it to come up or go down, but it's not happening, so we just have to wait for the price is moving further down. So the body of the candle is increasing, but not the wick has not yet come, because the candle is still at the lowest price. So let us wait for a few more seconds and see what happens. So now the price has moved up. So what happens is the lowest price has the wick marked, and as the price has moved up, even the body has come up. So now you can see there is a green candle. So what happened is the candle had opened here. As you can see that this place is the closing for the red candle and this place is the opening for the new candle. So as the price has moved up, so there is a green candle and you have a wick on the lower side because it may just be a last minute selling, and there was a small wick towards the bottom side. As now the price has lowered a little bit, the body of the candlestick has narrowed a little bit. So now we wait for 15 more seconds and then we'll go on to the next topic, that is a support and resistance and how support and resistances work. So a small story. Do you know that Reliance had consolidated for 10 years, that is from 2008 to 2015, the price of Reliance has not changed in a big way. It's traded on 500 rupees for over 10 years. So now let us talk about support and resistance. So let me tell you a small story. So you have 3 floors in your house, and in the ground floor you have your hall, you have your TV and your sofa and all those things, and on your first floor you have your dining table, your dining area, your kitchen and all these things, and on the third floor you have your bedroom. So on a very busy day, you come home, and what essentially happens is you third floor straight away and you freshen up, and what do you want to do next? Probably you want to have snacks. So what you do is you come down to the first floor and look for snacks. You find something and you eat it, you sit on the dining table and you eat. So this is known as support. So you have come down from one level to the next level and eating something. If you have ever lived in a house which has 2 floors, you will always feel that when you don't want to go up, upar niche nahi jana. You don't like to go up and down every now and then. That is the same thing for support and resistance. Once you have your snacks, you probably want to chill out and watch TV. So what do? You just come down and hang out in the ground floor. And then what happens? And you stay on the sofa for a very, very, very long time until you complete all your shows. And then what do? You have your dinner. You go back up to the dining room, cross that resistance of the ground floor, and you go to the first floor, have your dinner, and जो खाने के बाद नींद आती है वो कभी भी नहीं आती है. And then you go back to your bedroom and sleep. This is what happens. This exactly happens in trading also. You try to take rest at certain places. So now let us look at how it happens in the chart. Support and resistances. So now I'm going to show Reliance chart for support and resistance. We'll be looking at a brief period of 2010 to 2017. And this was the whole phase of consolidation. Consolidation is there is a certain range and stock trades between that certain range. This is consolidation. So if you look here closely, I have drawn a line here, and this is biggest resistance the Reliance has ever faced probably since the day it started trading. So I've drawn a few more lines here. So let me just zoom in and show you a little bit. So this is from 2009 September to 2011 July. So what has essentially happened here is, and mind you, this range is over 26%. This range is 25%. So this is a support and this is resistance, and Reliance could not overcome this resistance and for next 7 years. So what essentially happens is the stock moves from support to resistance and then comes back to the support and goes back to the resistance. This happens. The psychology behind this is there are people who are ready to buy the stock at this price. Why? Because they will feel that the price, if this is the support level, then this is the place where most people want to buy, and people will start selling at the resistance level. So this is how it happens here. Eventually, when the buyers win out, the resistance is broken and the stock price rises up, and it's an immediate rise. So this is how it happens, and this is the first 3 years of the consolidation. And if you move a little bit, and I have drawn one support level here, and this is basically a head and shoulder pattern. Like this is the head and these are the 2 shoulders. So so I have drawn a support level here, and as you can see that market has always traded in this. Support and resistances can be applied to the trends. They can be applied to downtrends, uptrends, and all these things. So as you can see here, this is a small downtrend in which I have applied support and resistance, and as you can see here, the market moves and takes resistances, and takes support exactly at this level. So, so how to draw these? It is another big video, but just understand that you have to visually see where the line, where you can draw an imaginary line between the wicks, and then you have to draw the line between the wicks. And this is a small uptrend which I have from 2015 to 2017. and then eventually it has broken this resistance, and then Reliance never looked back until now. So that is the small story of support and resistance. So now let us understand what a moving average is. So moving average is basically, for example, if you have 10 prices, so the mean of 10 prices is your average. But how does this work in stock market? How does it work in moving average? Is basically, for example, look at this green line. This is a 50 moving average line, a Y50, Y200, will come back to that. So just understand that this point in the line, for example, this is the candle here, and this point in the line shows the average price of previous 50 candles. That is 50 moving average. Average closing price of the previous 50 candles. So that's how this moving average works. And now what is exponential moving average? Exponential moving average gives little bit more importance to the last candle. How much more importance? That there's a small calculation which is 2 by time period plus 1. That doesn't make a lot of sense. So for you to understand, for a 50 moving average, the importance given to the 50th candle is 4%. Rest all the 49 candles have 96%. So that small amount of function gives you a huge amount of benefit in terms of giving calls early and all those things. So coming back to the most important part of the video, the reason why I'm making this video is the golden crossover and how the golden crossover works. So now let us start the Wipro stock and see how the golden crossover has worked. So what you have to do is you have to go to a website called tradingview.com, in.tradingview.com, and then you have to type your favorite symbol here. My favorite is Wipro. It's not, but still for our understanding, we'll take as Wipro Limited, and then it will open up a page. What we want to click is, we want to click on the full featured chart. TradingView is one of the best platforms for analyzing charts. I can bet my life on it. My defaults open that kind of chart, so probably you will be getting this chart if you open it. So I'll try to tell you what this TradingView is all about. So here is the symbol. You can just type whatever you want. Like if you just type Reliance on the keyboard, it will open up there. And this is your time frame. Here it is 5 minutes. You can change it to any time frame. If you want a shortcut for it, you can just type whatever time frame. Like if you want 1 hour, you can just type 1H in your keyboard, and this is a 1 hour chart. We are interested in 4 hour chart, so we'll type 4H and then press enter. So this is a 4 hour chart, and then we'll come here. This is the chart pattern. So here you want to click on candles. So this is the candlestick chart pattern. So overall, this chart, what you're seeing right now, will be known as a candlestick chart with 4 hour time frame. What it basically means is each candle shows you data of 4 hours. For example, this candle is opened here, closed here. This is the lowest price, and this is the highest price which it has achieved in 4 hour period. Now what you want to do is you want to have indicators. So for this, we are going to have one indicator, that is exponential moving average. We're going to have 2 exponential moving averages on this. So what you want to do is you want to click on this FX here, and you want to type in moving average exponential, and you want to click it twice. So what happens is you have two moving averages set up here. So one moving average, what you want to do is you want to put the length as 50. You can have any moving average. You can have even 5. You can have 5,000. If there are enough candles, you can even have a moving average of 1 million candles. But for our understanding, we'll have a 50 moving average, and color will keep it as green because that is what we want to see, and we'll increase the thickness by a little bit so that it's more clear. I click OK. And the second moving average, what you want to do is you want to have it for 200. Then we want to change the color of it as red, and then let us thicken this also till here, or probably here, and then we'll click OK. So let us go back to 2015. Here we have 2015. Essentially what you're seeing now is this green line is 50 moving average, as you can see here, and the red line is 200 moving average. Or each point on the line shows average closing price of the previous 200 candles, and each point on the green line shows average closing price of previous 50 candles. Now, how to apply the EMA cross strategy? So right now we are in 2017, and this is the Wipro chart of 4 hour time frame with 5200 EMA cross. What we can see here is basically here we had an EMA cross. So what we'll do is we'll take a ruler and try to calculate how much the market has moved with this EMA cross. So here we have death crossover, or when the green line crosses back from the red line, it is known as a death crossover. So when we had the death crossover, the market price is here, and as you can see, you had a 20% rise. This is the first golden crossover which we got from 2017. So let us move forward and see when we got the next one. On 13th August, we get the next crossover, and then it will pass on till 15th July 2019. So we'll take the ruler again, and then we'll put our ruler here, and it has closed here. So this is a 30% increase, and it has taken around 388 days, and it was for about. So if we move further, then we had another EMA cross on 23rd June 2020 after the whole coronavirus thing. And here, if we take it, and right now we are bleeding, so we get 101%. So basically, in 3 years, this stock has given you absolute returns of 160%. So if you just get the whole scenario here, a bank FD will take 20 years to give you the same returns as, just one strategy of EMA or golden crossover or 5200 EMA cross can give you. And mind you, we have not taken the short positions. We have only taken the long positions or the buy positions. Now let us look at one more thing, which is a lot of people's favorite stock, that is Reliance Industries. And let us look at another time frame. Let us look at an 1 hour time frame and see how it is. So we'll put the EMA cross, and okay, so this is Reliance Industries, and let us probably go back to here. We are in 2019 January. So on the first cross, we got it on 15 Jan. So let us just measure it, how much it is. So if we just here we had a death crossover, so this is 21% of absolute returns. And if we move a little bit further, the next big crossover we got is here. So if you just measure it till the next big death cross, it is 24%. And if we move even further, and then the next one which we got is here after the whole coronavirus, and this was crossed with 94%. And that's it, and we are still waiting for a very big cross. So as you can see here, with this simple strategy, you can earn a lot of money. So now let me tell you how to use these two lines. If you remember, I had explained you support and resistance, and now I'm going to tell you how these two lines are going to act as support and resistance. See, if you look closely here, this is 50 EMA, and the price movement has broken the 50 EMA. Most of the time, it will generally fall. If the two lines are very close to each other, then you can have a short target. Then most of the times, it will fall up to the 200 EMA and then go back. So this 200 EMA will act as support to the growth, to the stock basically. And as you can see here, it has taken a lot of support here, and even here, and eventually when it has broken this barrier, and then it has gone up. So even here you can see the same thing, and if you move even a little bit, even here you can see the same thing. If you will see the resistance side, as you can see, this is the 50 EMA, and it has done a death crossover, so the stock will go downwards. And as you can see here, it is taking resistance on the 50 EMA line. So this is how a stock eventually takes support and resistance on the 50 EMA line. Now the question arises that when should you exit after you enter the trade? So for example, if I put this on a daily chart, so if I put Reliance Industries on a daily chart, what happens is, so this is the 2020 coronavirus fall. So what happens here is, you're getting signal on 16th March 2020, which has basically evaporated 50% of your wealth. When you're ready to book profits, what you must do is, you must go down by one time frame. Like whatever time frame is available to you, it doesn't matter. Just go down by one. Like if you have taken a trade based on 4-hour chart, start trading for death crossovers on a 3-hour or a 2-hour chart. When you are ready to book profits. If you are not ready to book profits, let the stock go on until there is a crossover on your time frame. So this is where in the 4-hour time frame we got it, and this is basically at 1362, which is more or less like 300 rupees more than where you are supposed to sell it. And mind you, if you look at this here, you're getting it more or less 10 days in advance and at a much higher price than what you're actually supposed to sell it. So that's how it is, and that is the right place where you must exit. And yeah, that's it for the video. And I know that it's been a long video, but I hope you have enjoyed the video. And if you have liked the video, please give a thumbs up. And if you have any questions, you can share in the comments down below, and I'll be very happy to answer them. Thank you very much for watching.